Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. If you've been following this journey, welcome back. If you're new to the channel, please subscribe so that you do not miss future videos. Also, hit that like button to help me out with the YouTube algorithm. Getting paid just for owning stocks, this is what dividend investing is all about. And right now, my current strategy is to deposit $250 of my own money per week and let the portfolio do the heavy lifting for me going forward. All dividends received will be reinvested back into the stock from which it was received from. And my goal is to put this money to work for me in the long term to build a growing and reliable income stream. And what we're looking at here is my M1 stock brokerage account. This is a taxable account, and this is the account that I've been doing my videos on. This has been my primary focus, is to show you guys this, and this is my weekly video to show you what my $250 deposit did this morning, what I bought, and what that effect was on my monthly dividend income. So let's take a look at the 1 week the performance over the last week, and we can see we're down 1%. The portfolio, lost $2,000 and just a little bit in dividends. We're in January, so we're in the first month of the quarter, and it's usually the third month of each quarter that pays the most dividends. That's if you own a lot of different companies or a lot of ETFs like an SCHD. It's going to pay you in the third month of each quarter. And I'm going to click on the activity log. I want to show you guys what you bought, because I know when I first got into individual stock investing, I really didn't know what to buy, and I was always looking for ideas. Of course, you should do your own research, and these buys are based upon my allocations within M1. And again, do your own research. To me, these are good buys, and they may not be good buys for you. So let's see where this 250 went, or actually the 249.93. We can see we bought a little bit of Kellogg's here, 1276. AbbVie, 2510. AbbVie has a really good mix for me. It's kind of a have your cake and eat it too dividend growth stock, because you get really good growth in the stock price, as well as when AbbVie raises their dividend, even though the last one wasn't quite as high as some of the previous ones, it was still above 5%. I believe it was 8%. I'll have to go back and look, which is pretty respectable for a dividend raise. Next up, McCormick, $21.58. ADP, $9.15. Next up, I bought some Prudential, $18.40. And Walgreens, $6.03. Amgen, $12.54. Lockheed Martin, $4.01. And looks like this was the largest purchase of the portfolio, Hershey's, and I really like this stock. It's performed well against the S&P for the past 5-10 years. It has good dividend growth, kind of similar as to the AbbVie. It's around the 5 to 8%. So purchase some Hershey's at $36.69. Pepsi, another popular one with us dividend investors, $32.46. Waste Management, $6.73. Pfizer, $16.09. Hormel, $13.30. General Mills, $16.39. And rounding out the buys was Honeywell, $18.70. And what we're going to do next is we're going to go over to my tracking sheet here. And I know a lot of people have their own methods, or they use an app or more sophisticated ways. Instead of typing in things differently, or putting in my own information, or having to give in my login credentials, I know they don't pull your actual information. They just look at the surface level of your accounts and not actually get into them. To me, that's still a little bit alarming that they can get into to see them at all, and I don't like that. So I have developed a simple sheet, and I will put a link below to this. It's just in Google. It's a Google spreadsheet where I've put in each of my different positions. I have 83 different positions, and you can see here I put the company, the ticker symbol, share price, number of shares, market value, my cost basis, the gain or loss on it, the dividends per share, yield percentage, my yield on cost, and you can see I also sort it by this. This is the dividend pay date, and here's the estimated dividend I'll be receiving. This is the high watermark I've kind of bought up to. Sometimes when I get the actual dividend, it's a little bit lower because I bought fractional or whole shares after the X dividend date. And we can see these are the total dividends that this investment has paid for me. And we can see this is the month when we can expect a dividend increase. And some companies, they haven't increased their dividend every year, like Omega here. It pays a really high dividend yield, but they haven't been raising their dividend every year. It's been static for the past 2 years. But you can take a look at this dividend yield. As long as they're paying it, I'm happy. So I'm just going to roll it back in and buy more shares. And to me, again, this is not investment advice. I think the share price of OHI, it's been at 40 not too long ago. We'll see if it can get back up there. But I know some people like to chase a little yield. This one is maybe one of those, but maybe not. But it pays a consistent dividend at the very least. It's just not going up. So let's take a look here. So the ones where they do pay a consistent dividend, April, you can see Apple. We're going to be expecting a dividend raise from them. I'm going to scroll down here and show the dividends that I've received so far. And let's just do a quick count. I've got them highlighted here. So far in January, the dividends I've received into my account were $261.87. And the next thing I'm going to show you is my current monthly cash flow average. We can see the quarterly and yearly as well. But I kind of follow the monthly closer, kind of like a paycheck. So right now, this dividend portfolio is paying an average of $794.55 each and every month. And I'm going to show you what the result was of that deposit. What it did was it added an additional 60 cents every month to this dividend portfolio for monthly income. Because this morning I started out at $793.95, and then that bumped up to $794.55 as a result of those buys. And it didn't go up very much because a lot of the stocks that I bought, like Hershey's was the biggest position I bought. Hershey's does not pay a very high dividend yield, even though but that doesn't matter to me because Hershey grows their dividend year over year. So to me, it's a good long-term investment. So that's, again, the 60 cents right there. And let's see, is there anything else I want to show you guys? I think that pretty much covers it. Well, okay, let's go over real quick. I'm expecting some upcoming dividend raises and in the next week, actually this week. And Intel, just the forecast I have is on the 25th. If hopefully, knock on wood, Intel's going to raise their dividend, it should be in the 25th. And we'll see what that's going to be. In my next video, I'll show that. And then BlackRock should be on the 27th. So expecting some dividend raises. And of course, this will cause on the 25th, I'll be putting a line item here, what that effect was if and when Intel raises their dividend, because things like when we buy more shares of dividend stocks or those stocks raise their dividends, those are just two events of others that raise our monthly cash flow. So that's all I had to show you guys for this week. And again, subscribe to the channel if you're new. Click the like button if you found this information valuable. And have a great day.